I lack trading capital has been the biggest lie most people use for not making money in the forex market. Most people come here into the market and then they try to make money from the market and then things refuse and they keep on complaining they lack capital. But in actual sense, what they lack is skill set. That's why in today's video I want to prove to you that it's never about lack of capital, it's about lack of skill set. By showing you this account, a $20 account that I grew to $288 in 10 minutes from my trading account. Look at this, traders. This is my account right here, as you can see, with Xness. I was able to flip this account from as low as $20, you can see, so 89 Ugandan shillings. This is actually very small money, look at this. So this is 89,000 shillings, that is $24 as you can see, and that is almost 3,000 Kenyan shillings as you can see, traders. Now, I was able to flip this account to a million Ugandan shillings. So a million Ugandan shillings, as you can see right here. So that is a million. That is the 1,057,000 shillings in just 10 minutes. Traders, in just 10 minutes of holding these trades, I was able to make that much money. So this is again with the best broker that I'm using, Xness, as you can see right there. Xness broker. Our balance is 1 million Ugandan shillings, as you can see. That is over almost 40,000 Kenyan shillings, as you can see. From $20 to $280, almost $300. Now, here's Xness. Just here, as you can see, that is Xness broker. Real account, guys. There's nothing like bluffing. So, how did I do this? Obviously, I have a strong system. Now, the same thing I'm going to be explaining to you, traders. Whenever you want to succeed in the forex market, what you lack is the trading system or a strategy and everything. You need to develop a system that can make for you money. Money on a small account, big account, I don't care. Just have a strong system. When you have a strong system, you'll never come up with such lies that I lack trading capital. All you just need to know how to learn how to trade, and I'm going to be explaining to you with this video. So make sure to watch this video from the start to the end, and don't forget to subscribe. Let's get started with this video. Now, traders, first things first, whenever I'm trading in the forex market, it comes down to how many pairs you're trading. I'm only trading gold. I've been trading gold for now quite some time, and I'm only trading one pair. So I know every time where gold is going to go. If it's gold is going to go up or down, like I'm monitoring only gold. So how do I trade and make money on small accounts? There are two ways. If I'm making money, I either risk small accounts, I go for margin on small accounts, and then I trade with care on big accounts. Why do I trade like that on small accounts? It's because with small accounts, you don't want to waste time on small accounts. You want to go for margin, make money, and then get done with it. And then when you have more liquidity, then you're going to be more careful. You're using stop losses and everything. My system that I've developed, it helps me have low risk entry points, because when you're going for margin on small accounts, you can be taken out easily. So you need to have a system that has low risk entry points and higher probability setups where you're targeting more money. Because this trade right here that I caught, I was able to flip an account from $20 to $288 in just, not even in a day, but this was just minutes, as you can see, traders. So let's jump onto the charts. Now, traders, this is our chart and this is the gold chart. So the first thing I always do whenever I'm trading gold is go to the daily time frame. So this is my system. This is how I trade. I go to the daily time frame. When I come to the daily time frame, you're going to notice that either these candles are either moving to the upside, or they're coming to the downside. So we have sellers going up, sellers coming down, or buyers going up. The only time when prices are the same exact zone, meaning that on the smaller time frame, I'm going to see price consolidating, just like here. Now, what I do is, when I come onto the daily time frame, I want to mark out the high and low of the previous candle. Why am I doing that? I'm literally drawing out the support and resistance. And that is very nice when you're trading in the forex market, because you want to know where price is going to go. You want to know the bias of the market. So as you can see, I've drawn out these two lines, this being our low of Wednesday. So today is Thursday, as you can see. Now I'm going to show you how the trades that I called to flip my account. So today is Thursday. So what we do, we mark out the low and high of the previous day, which is Wednesday. So this is the high and the low. So we go on to the smaller time frame, which is the 1 hour candle. Now to look for price action. So before we do that, let's mark out these high and low of the previous day. So we're going to mark this out as our high of Wednesday. So just going to do this. So this is Wednesday high, as you can see. Now we have to mark out also the Wednesday low. Now, why do I do this? The reason why I do this is because whenever you mark out the high and low of the previous candle, this helps you understand where the bias of the market is going to go. So depending on what happened the previous day, we can know where price is going to go. So this is how we do it. When you look at gold, gold has been trying to break the all-time high. So meaning the all-time high, price has reached the resistance. Now, how do I see that? I go into the bigger time from like 4 hour candle, like this. So when I zoom out like this, you're going to see that price reached this resistance right here. You can see. So what I'm going to do is I'm just going to pull this line and then bring it to the left side of the screen. And then it's going to mark out the fake out we had. So you can literally see this is a fake out right here. Now, you can see this is all a fake out. You can see traders, this is all a fake out. This is how I know price is going to like go either up or down. Now, after doing this, you can literally come on to the daily time frame and you're going to see that was a fake out. So we go back to the daily time frame. You're going to see properly that there was a fake out. You can literally see there's that zone that I marked out properly. You can see that was a fake out, indicating that the new day is going to start by rejecting that zone if there was a fake out like this, even though it's all-time high. And also, there is nothing major happening right now in the world that is going to force gold to go up. Right now, China has come in terms with America about the taxes and the tariffs, so nothing is crazy happening right now, as most people would think. So now, right now, what I do, I go back into my smaller time frame and I look for the price action in between here. Now, since I know price is now going to drop, I need to look for the price action in there. So what we do, we jump onto the back on the 1 hour candle, just like this. Now, you can literally see now this was our high and low, as you can see, meaning the new day started by price dropping to the downside. So let's say where did the new day start from? Let's say now this is one. So this one big candle right here was the new day. So it started by just dropping to the downside big time, as you can see. This is one in the morning. So when price dropped big time like this, obviously it reached this low, this part right here, which was Wednesday low, this part right here. Now, this was the high of Wednesday, and this was the low of Wednesday. Now, when price opened up, when it closed, we had created this resistance, and price had come down here, consolidating like this. Now, what happens most times, whenever price is consolidating like this, it's going to first take out liquidity before going anywhere. Now, you can see the new day started from this part right here. As you can see, let's see, the new day started from here. This is 1 a.m., as you can see in the night, 1 a.m., and then price started by pushing back up to fill up liquidity up here, which is that fair value gap. So that fair value gap was filled up like that, as you can see. Remember, we're looking at the price action that is happening in between here, as you can see. So price filled up that fair value gap, and people who called sales from here, they made money. But remember, for me, I'm asleep at that time. I don't trade most of the Asian session. It's rare for me to trade the Asian session. Now, what happens as price is coming down? Remember, we wanted to either break this part or this part right here. So by the time I woke up, price had already broken this zone right here, and now it was ranging at this part right here. This part right here, as you can see. Now, in my head, obviously, something came up. Obviously, we know price is now in a downtrend market. Obviously, you can see this is a high, and then this is a lower high. Now, price has broken this low as with an impulsive move. Anytime when you see an impulsive move, we have to have retracements come into play, because impulsive moves, they create fair value gaps into the market. And also, anytime when you have, like, there's no way you see price moving just going impulsive. No, we have to have impulsive and then retracements. If price is going up like this, impulsive retracements. Yes, we have to have retracements come into play. Now, here's the plot twist. When price dropped big time from this zone to this zone right here, and then started reversing to the upper side, guys, literally, I just used a Fibonacci retracement. I knew price was going to come back and retrace, but I needed to know where is it going to end. So I applied my Fibonacci retracement just like this. You see, traders, from this zone right here to this zone right here, like you can see. So when you're applying a Fibonacci retracement, you apply it from swing high to swing low if it's in a downtrend market. Now you want to understand where price is going to stop from. Now look at this, traders. Price almost reached the 0.5. Actually, that's why I reversed from the 0.5 level. And most people would be wondering, why didn't it fill up all this gap? No. The timing also matters when price is doing this, but price stopped at this part right here where it's a resistance and this side is a support. You can see that's why price stopped and then started reversing. It even gave us that reversal candle. Now, what I do is now stay in the smaller time frame. I don't trade in the bigger time frame when I'm looking for confirmation. I look at the smaller time frame. So again, when price dropped massively and broke my zone right here, I knew price had to go back and retest. But the plot twist here, look where price is retesting. It's retesting on the Wednesday low. The Wednesday low is a resistance, and the Wednesday low is also acting as our zone, our point of interest where price is going to reverse from. For you to see that, you're going to have to zoom into the 5 minutes time frame. That is where I trade from. The 5 minutes time frame, that is where I take my trades from. So this is what we had. Look at these traders. Now, we have to have liquidity taken out, and liquidity was being taken out in a form of price retracing to the upper side. So what I did is mark out this zone right here. You can see. So when price was ranging above here, I had to mark out this zone right here. Now what happened here is price first took out liquidity. So you can literally see that here. So this is all liquidity that was taken out. All this was liquidity, as you can see. Now, you can even see when price reached our line. Now, this is our Wednesday low. Remember, our Wednesday low is a very important low. It's not just even a Wednesday low. We also have a supply zone right here. So we have a supply zone right here that you need to mark out. Just like this. This is a very easy amount to trade in the forex market. So we have a supply zone just like that. You drag it like that if you want, or when you want, you can just use a line. So we can just use a line, but obviously we already have our line that is marked out. This line that is a low. This is the Wednesday low. Now what happened? Price started by pushing up to the upper side. So it started coming in this format, giving us higher highs and higher lows, as you can see, as it's pushing. Then when it reached this spot right here, most traders thought price is going to continue going back up, because on the 1 hour candle we have fair value gaps. Everyone thought price is going to go back up. But for me, this is what I was looking out for. I wanted to see price come do this. I wanted to see price fake out, come back and close from this side, reject, and then start dropping. That is the same way I caught the same trades, guys. Remember, this is basic. This is like basic stuff. Like you can see, these are all sells. You can see traders. These are all sells. You can literally see these are all sell trades that I caught. The same entry, the same exact entry. You can even see here, price was giving us more of like a reversal pattern. Since where we at is a reversal point, that is a low, a previous low from yesterday, which is acting as a resistance. Like literally here, we had so many confluences to tell us price is going to drop massively. Look at this, traders. We had this low. We had price even give us like a head and shoulder pattern. Look, so this would be a shoulder, head, and then a shoulder. And then what happens? Price breaks the neckline, did the pullback and drops massively. And the timing matters also, traders. Like literally the confluences you have to have when you're trading is crazy, but this is all part of my trading. So let's go back onto the 15 minutes time frame. Let me show you that this was the fake out, and that is liquidity. When you apply the session, market sessions, you can literally see that in the London session, that is where we have mostly manipulation. And then in the New York market, that is where we have this redistribution. You see? So this was all in the Asian session. Price doing all this in the Asian session. And then you have price tap into this zone, then it goes and manipulates. Manipulating, mostly they're taking out liquidity or traders. After this, price started distributing. Most times the biggest moves happen in the either Asian session or the New York session. That is where most of these sessions happen. And that is how I was able to catch this trade, and price dropped massively, guys. But if I'm to explain this in the basic way, we had price, break our low, and then it broke it with much momentum. So we just wanted to wait for price retracing, and then we wanted to see the major drop. That is all what we wanted. Now, most of you guys would be wondering, how did I have my entry? Again, I'll zoom into the 5 minutes time frame. Look at my entry. I want you to see this entry properly. We had fake out. Price closed back inside our low, below our low. Price retested our low, and it didn't come back here at any time. By the time whatever happened here, I actually don't know even what news was dropping, because most of the time it aligns with the news. But all here, we had so much confluence. If you are to draw that trend lines, whatever you wanted, look at this. If you are to draw that trend lines, look at that. Price would just play out the way you wanted. Now, the best way to take your trades, take them off trend lines. When you're to look here, look at this. Again, fake out. Price that's now tapping to our trend line. I took my trade from here. And the time when I took this trade, price first almost like took me out, but after it started pouring. Because remember I told you, low risk entry points, high probability setup. So if I'd lost, I would lose $20. But look at how much I made. Look, if I kept on even holding like until, look how price dropped massively. You see that, traders? The way I trade is very simple. Again, mark out the high and low of the previous candle. And then look at the price action. What is price doing? If price breaks the previous, like literally you can just know. If you know the bias of the market. So obviously me, I know price was going to sell massively. Because impulsive move, retracement. Look at this. Impulsive move from here, retracement. Impulsive move, retracement. Impulsive move. So you need to have a retracement come in like that. Now look at this. Let's remove this and put it here. Like, what is hard there to understand about trading? Like, look at that. That is how prices just moved today. Impulsive move, retracement. Impulsive move, retracements. I'm considering everything that is happening. There's nothing crazy happening right now in the world. There's a war between India and Pakistan. That didn't affect the market really so bad. But there are some events that affect the market so bad, and people pump money into gold, and then price will go to all-time highs for gold. But this was very simple price action. Literally, this is how I trade every day. If I'm looking for long-term trades, I use the same exact way. I draw out the high and low of the previous candle. And there are times of the day where price will move. London session, price will go and manipulate. New York market, that is when we have redistribution, either up or down. As simple as that, guys. There's nothing like I lack capital. It's always I lack skill set. If you have enjoyed this video, make sure to subscribe, and I'll see you in my next. Peace.